Hello, I'm Duncan Warnock from Tax Accountants. Today I just want to do a short video and show how you can allocate a short payment for an invoice where the customer has essentially paid in full, but because the payment has gone through a merchant, there is a small charge from the merchant. Let's begin. Okay, so I'll just show you the invoice for the customer. So we've just gone into sales and then customers. The particular customer here is Alpaca, and they've been invoiced for $100, as we can see here. Now what we'll do now, we'll go to the bank account. For this example scenario, and by all means this isn't the only way you can do it, it's just showing you an example way of how you can manage scenarios where the merchant is giving you the customer payment and deducting a small amount. So here we are, we're in the banking area, and what's happened is the merchant has taken a 2% fee on the $100 customer payment and basically then paid $98 into the business owner's primary business account. They receive customer payments in. So the particular person here, transaction is $98. It's from Alpaca, and so what we're going to do is we're going to select that. We want to allocate this transaction. It's in the bank feeds. So what we're going to do, we're going to find a match. And what happens here is there is quite a bit of filtering here. So if the transaction you're looking for doesn't appear, then perhaps adjust the filter options. As we were saying before, the invoice that has been paid is the invoice 1033 for Alpaca. We can see here that the transaction amount, the original transaction amount was $100. We've only received 98 because the merchant has withheld $2, 2%. So we need to find a way to resolve that. What we could do is just simply allocate the $98, and the end result is a $2 short payment shown on the customer bank account. And if we do go down that process, there are some other ways of managing that. But in this example, I want to show you one example way to fix it up in one go. So we've recorded here the $98. In actual fact, they really paid $100, even though we only got $100. So I'm going to put in 100. I've now got a difference of -2. I want to resolve that. So I'll click the Resolve Difference button. Click Add New Transaction. I'll just navigate down. In this case, we're just going to say that the merchant was Live FPOS. We're going to allocate this fee to merchant fees. Don't need to record class or location in this case. And I'm just going to record a description of Live FPOS, merchant fee, 2%. This might be overkill, that description, but just shows you an option. Put in $2. Let's just say there's no GST on that. Make it minus. Now what you'll find is the total, we'll just work our way up. The money received is $98 as per the bank feed. We're allocating 100 to the customer invoice because effectively that's what they've been paid. And we're allocating -$2 to merchant fees because that represents the merchant charge, and the overall total being allocated is $98. So that's in sync. Click Save Now. Transaction matched, and we're done. So just to illustrate what we've done, what I'm going to do, go into QuickBooks, in QuickBooks tab, we'll look at the alpaca invoice. It says match to multiple transactions. We've got $2 expense to live FPOS, and we've got payment in full from alpaca. We'll go back to sales, we'll look at alpaca, find that invoice from them. There's 1033. We'll actually now see the invoice total was 100. They've paid in full $100. And that's certainly one way of making sure that the transparency of effectively what the customer has paid stays true to the original invoice figure. All right, so we'll just get out of there. What we're going to do, we might just run our profit and loss. I think from memory it was February 2007. We'll just run it for that month. Just make it cash. Okay, so we'll work our way down. Must have not been Feb. Let's just go generate. And what we'll see is we can see the expense, merchant fees, $2, has been successfully posted as an expense. And there's the transaction. All right, so look, there are different ways of doing it. It depends how you're using bank feeds in QuickBooks. It can also be influenced by your personal preference or whether the PayPal account is feeding directly into QuickBooks or not. However, I think this is certainly one way of maintaining the integrity of the customer payment against the customer invoice, where the money you have received as a business owner is slightly less than what you've invoiced the customer. All right, hope that wasn't too much to digest. Hope you found the video useful, and thanks for listening. Bye-bye.